Hello, everyone, and welcome to the last non-repeating session of this wonderful forum. Thank you, everybody, for attending. We will move forward now with the final session today. You have seen the faces here throughout the day, but we want to give you an opportunity to learn a little bit more about the four of us, particularly the other three that are here that make up the investment team of the Collective Investment Group. What we're going to do is give you a chance to get to know us better, also explain to you from a high level what the Collective Investment Group's investment process and thesis is, how we're going through our process of looking at the developers' deals now that you've heard them, and we will answer a number of questions that we believe that are on your mind as we move throughout this process. So, thank you for continuing to remain with us. The Collective Investment Group is actually an investment management firm. This firm was set up in the traditional sense of a private equity real estate investment firm, specifically designed to invest in the projects of the developers that you just heard of who are members of the Collective network. We have been together as a team now for several weeks, but we started the firm several quarters ago. The idea, as you heard throughout the day, was generated and began to be fostered and watered over the last about last year and a half. So we're glad to have an extraordinary team. The team that you see in front of you, this team was handpicked. The team was vetted quite well. We had a number of candidates that applied for this opportunity. Some people have said it was harder to become a member of this team than it was to get into Howard University or Harvard University. So we are really, really glad to have Karine and Stuart and Randall with us. Karine and Stuart are directors in the Collective Investment Group investment firm. They serve as directors of investment or investment directors. And Randall Drain is our senior strategic advisor, and I serve as the chairman of the board. So we will definitely go with ladies first. Karine, tell us more about yourself. Give us your background so that everyone that's continuing to watch can know more about you.
Sure. So, in my most recent role, I worked in investment sales for the Blanc company, facilitating commercial real estate transactions in the northern New Jersey market. Specifically, I did a lot of work in the city of Newark, working with a lot of the Black developers. And in that role, I was able to see a lot of the challenges that Black developers and investors, for that matter, go through in trying to get into real estate. The city of Newark is one of the cities where it's essentially imprinted in their law that if there's any large redevelopment or incentive-based project, a developer would have to attach themselves to a minority developer. So Newark was a big city in terms of equitable growth and trying to bring up Black developers in the city to get in the pipeline. And that was one of the things that drew me to this role. In really trying to get more on the impact side. My background's more on the institutional side. Prior to that, I worked for PGIM Real Estate, which is Prudential Financial's private equity arm. And I also worked in fixed income portfolio management for Lincoln Financial. So I was very interested in this role to kind of bridge my boots on the ground experience with the institutional side to see some impact done in the community.
Well, thank you, Karine. We're so glad to have you as part of the team here, and your experience, your background, your drive, and creativity are definitely welcome and definitely needed here. So welcome aboard. Stuart, tell us about yourself.
Thanks, Steve, and thanks everyone for tuning in with us today. I think this is really wonderful and momentous convening so far. As Steve mentioned, my name's Stuart Hean. I'm one of the incoming co-directors of investments with the Collective Investment Group. Prior to joining TCIG, I spent the better part of 4 years working with Shift Capital, which is a mission-driven, place-based real estate development group based primarily in Kensington, Philadelphia, where I worked in a directorship capacity overseeing commercial leasing transactions and development strategies across a roughly 2 million square foot commercial and industrial portfolio focused on and around Kensington Avenue. Additionally, in my capacity with Shift, I oversaw a number of strategic initiatives such as the Kensington Avenue Storefront Challenge, which is an entrepreneurship mentorship program. Also had the opportunity to participate alongside a few mission-driven Latino small business investors in purchasing a collectively owned real estate portfolio based in Kensington, and have been working to support a number of startup entrepreneurs in a technical assistance capacity for a number of years. Prior to Shift, I spent some time working with one of our sponsors, Reinvestment Fund, supporting the C-suite there. And before that, I held a dual role as a research coordinator at the Penn Institute for Urban Research and the Wharton Real Estate Department. The bulk of my career focus is in equitable development and mission-driven investments. Very interested in creative placemaking and equitable, community-driven economic development. And so I'm really thrilled to be here undertaking this initiative with the Collective Investment Group.
Well, thank you, Stuart. We're really glad to have you as part of the team. And, you know, it's always a challenge to put together a really good team. And what we saw in Stuart and Karine was the ability to be able to execute on this really big mission and to execute very quickly. But you always need a guru, a griot, whenever you're putting together a great team in order to continue to execute well. And that's what Randall brings, to the team. Despite his youthful looks, his years of experience in the real estate space help us, really round out the rest of the team here. Karine and Stuart are doing all of the heavy lifting, the wood chopping, the tough work. Randall helps set the pace with me and guide along. And so you get a chance to learn a little bit more about Randall right now. Randall, give us your background and tell us your story.
Sure. I'll be brief, and thanks for the introduction. Thanks for the invitation to this event and to participate in the mission of the collective. First and foremost, I'm a Philadelphia native. And so that's part of the reason why this opportunity rings true to me. And then on the professional side right now, I'm the managing partner of Reed's Bay Investment Group, which is a boutique investment firm focused on real estate credit investments. We're currently in the market with an income-oriented fund that targets transitional lending, of which development kind of falls in the category. So Steve saw natural crossover and synergy in terms of the type of projects that we look at Reed's Bay and what we're endeavoring to do here with the Collective Investment Group. And then in addition to that, with Reed's Bay, we recently launched and created an investment process team built out, which is what we're looking to do here at TCIG. So he kind of twisted my arm, but didn't have to do it too hard. And in addition to that, of course, meeting Karine and Stuart, although it's been recent, has just kind of put me over. It put me over the edge in terms of committing to this and coming in as an advisor. And so I'm excited about what we're going to accomplish here from an investment standpoint, and then obviously from an impact standpoint. And yeah, looking forward to this conversation today.
Great. Well, I'm proud to be associated with each of you individually as well as collectively. So thank you all for accepting our invitation to become a part of this journey that is more than a moment. It truly is a movement, and we're definitely making history along the way. And so you all are a really big added addition to what we needed in order to accomplish our goal and our mission. So thanks so much. And hey, to everyone out there that's still listening, I told the team, we just had one requirement. We just need you to work half a day. And anybody that works with me, it's 24 hours in a day. And so that's a 12-hour day at a minimum every day, and each one has stepped up, to do that. So I'm very, very excited about what the future looks like for the collective investment group. I've worked with and built out teams in multiple investment management firms over the years, and so this team has had a chance now to, and will continue to benefit from all the mistakes that I made in the past and all the things that I think I've done right. So this is great. So let's get to it. Let's talk more about the investment thesis of the collective, investment group. It's so important today to not just jump into the fray of investing, but to really have more than just a process, but a thought process of how you're going to invest, particularly with something where you have to have impact as well as financial returns. So I'm going to give you all a chance to tell everyone what is our investment thesis at the Collective Investment Group.
I'll be happy to jump in on that, Steve. I think I'm almost going to flip it around a bit and talk about the opportunity that we're seeing in Philadelphia and why now is a good time to be building what we're building. I imagine a lot of folks on the convening now are familiar with sort of the assets that are intrinsic or indigenous to Philadelphia as a city. We have strong transit opportunities, both with built infrastructure on the train lines and the highways that connect us to Washington, D.C. and New York City. Some amazing anchor institutions, our EDs and our MEDs, that are leading to a growing biotech and life sciences sector, and some companies, some unicorn companies that have really sprung up and actually impacted Philadelphia's skyline in the past couple of decades. Yet we are one of the top three poorest big cities in the U.S. Where, as Taib and Rashad were describing earlier, inequity and income inequality is stark and noticeable. So we're really living in Philadelphia in a time of two cities. Yet the construction is booming and real estate is booming. And I think if folks have participated in the convening for the bulk of the day, you will have been able to recognize that we have an exceptionally strong group of developers who've all presented and demonstrated an aptitude and an enthusiasm and a capacity to conduct real estate development from across the full spectrum of project types and asset classes. So in acknowledging the opportunity that comes through the Collective Networks pipeline, it's become critical and to acknowledge the need for an investment group that can identify, evaluate, and execute viable early stage real estate investments with an eye towards financial flexibility and impact. I think I speak for the group in saying that we're dedicated to pursuing projects that are led by results-oriented sponsors, both from a financial and an impact standpoint, who are armed with an unrelenting dedication and capacity for technical competence and cultural competence. And I think after today, my confidence has certainly been solidified that the groups that we're working with now and some of the other groups in Philadelphia all possess that and are poised to capitalize on this being the right time. But forgive me to my colleagues if anybody else wants to jump in on that.
Yeah, that's a very comprehensive explanation. Karine, Randall, do you want to add anything to that?
I think Stuart hit the nail on the head. Look, when as investors are always looking for quality opportunities that are defined or are overlooked, and I think that that's what this is. Sometimes there's a kind of misconception that something that doesn't get attention isn't getting attention for a reason. But I think good investors ask the question, why isn't it getting attention? And then are able to unearth opportunities, because sometimes great opportunities don't get enough attention. So I think, that's where this opportunity falls, where the collective falls. And I would argue, TCIG obviously in coordination with the developers themselves, kind of package it all together. So from a execution standpoint, you're able to facilitate investment quite easily.
So then how does this thesis, our approach, fit in you all's minds with capital sources that are out here? I mean, we're touching on two different points. There's impact as well as and financial returns. But based on you all's experience, and talking specifically to capital sources out here that are listening, why this and why this opportunity now? I know it was touched on throughout the day, but tidy that up in a bow. Why this and why now?
Yeah, so if folks had a chance to read Ray Ramsey's interview with Impact Alpha last week, he commented on, in designing portfolio investment processes right now, we can't really afford to not take impact into consideration. Mm-hmm. And any investment process that ignores impact is exposing itself to risk. We've seen, and I think we're going to get into a conversation about impact later in this session. But we have a number of different ways of defining it, from the UN's SDG goals or corporate social responsibility goals, and those have proven to be profitable at this point. And so I think that to capital sources that are evaluating Philadelphia and are evaluating impact investment potential in Philadelphia, I think that blending impact with a strong financial underpinning is really necessary.
That makes a lot of sense. So then let's talk about our process and our pipeline. Clearly, we got a chance to literally kick the tires on the pipeline today through the interviews that you guys did with our developers. But let's talk about the process. Karine, how would you describe TCIG's investment process? We know it's still being built out, but a lot of it, has been, really thought through and mapped out. How would you describe it?
Sure. So I would say, if I had to give an overarching answer, it's really three different processes that combined make up one, and I would say the first step is the process we have with our investors and how we get capital to flow in through our vehicle. And then how do we deploy that capital to the real estate developers and their projects in the form of equity. And then that third piece, I would say, is the impact piece. And, you're going to hear me say this and everybody else say this, but, that impact piece, it's not just, we're not just checking boxes here. That impact piece is a main part of this. It's a main component of this. So when I think about the process, it's really how do we get that to flow very smoothly? And in regards to our pipeline, just to give you some information about the pipeline as a whole, we do have about 30 projects in the pipeline that have not fully gone through the due diligence process, still undergoing underwriting and trying to figure out how they fit into our criteria. But we have 30 solid projects, and they're very strong. they are opportunistic in nature, meaning they are early stage, ground up development projects. And in regards to the pipeline, I definitely want to speak to the diversification of the pipeline, because I think that is so important. The diversification, number one, is going to offer some protection to investors, but also I think the impact from the diversification is just going to reach so broadly. We have residential, we have multifamily, we have affordable housing, we have the vertical farm, retail, shopping centers. It's just so diverse, and I think that's the gold mine in our pipeline.
And so you said 30 projects. Is there dollar value on those projects? What's sort of the range when you add them all up?
Sure, it's upwards of 90 million. I would say definitely over that mark.
That's great. Anybody want to add anything else to that?
Yeah, I think Karine covered it well. But what I'll just say too, in terms of the diversification of at least the current pipeline, is that what it offers is some variation within a concentrated bet. We understand that a Philadelphia focused real estate play is concentrated by its very nature, and that goes with having a focused team that has experts and expertise built up over time. Excuse me. But this situation also offers some diversification with regard to, as Karine mentioned, property type, size, and then also kind of sub-market and micro locations throughout the Philadelphia area.
Mm-hmm. And it's interesting, that diversification that you mentioned, Randall, and you gave us details on, Karine. It's what's so interesting about it is that came about less by design and more by just really giving the developers an opportunity to give us what they had that was available. And it was nice to see that it came out that way, that it's so well diversified. Going into a process, you would want to sort of force that to happen, but it shows the strength of our developers and what they have, available, at the table. So it's a great start to, for any vehicle that's being developed out the way that we are. So
yeah, and to that, I'll say, every real estate sector, if you will, has a different kind of impact, tends to have different kinds of impact. So really hitting different real estate classes, I just see that impact being able to stretch so wide in traditional and non-traditional ways.
That's good to know. And that's exciting for investors. And as you said, it's a risk mitigant. Having a broad swath of types of projects, and then also size. What seems to be the range? Is it 500 million to 500,000? To see how I think, I'm already trying to figure out how do we get to $1 billion. So what's that range? What's sort of the smallest and the largest? What seems to be coming through so far?
You mean at the deal level?
At the deal level, yes.
Yeah. I would say they range anywhere from, I would say, 500,000 to 30 million.
Okay.
Yeah.
That's
so sizable. Yes, definitely some sizable projects in there.
It's good. What did you guys like most while we're talking about pipeline? And it was really exciting watching you all talk with the developers. What did you all like most about and learn most through your sessions with the developers?
Oh, the vertical farm. I'm sorry, I have to go first. The vertical farm was so cool.
Go first, Karine, go ahead.
So cool. I'm totally biased because that was my session. And I love agriculture and nature. And when I saw the picture, it was like I fell in love.
The picture truly is worth 1,000 words. Yes.
I'll then and follow up. I think my conversation with Leslie from Mosaic and Lorraine from Wilson Drake the sort of my plan in the session outline was to get to an explicit conversation about impact at the end. And Leslie and Lorraine both implicitly addressed the importance of impact by way of inclusion as germane to their business model. So, Leslie talked about, the importance of hiring from the community, hiring people of color to be on the contracting team, to be on the design and pre-development team, to be part of building maintenance teams, and to be providing groups who are engaged in that work with the opportunity to flesh out into their own ownership models and to scale up their operation. And then to be democratizing access to investing in these properties through tools like crowdfunding, and through who the tenant population is. Very, very inclusive strategy around commercial and residential leasing, which I thought was really remarkable. And then Lorraine's model is essentially to purchase very cost-effective land, very low basis land in sort of less visible parts of the city, and then to build a high-quality product that is affordable at a moderate price, which is effectively market rate market affordable housing that's achieved through market mechanisms. And I thought that was just sustainable development goals for them to just have these concepts as intrinsic to their models.
Yeah, that is nice to see. It's refreshing.
Yeah, I'll piggyback a little bit on what Stuart was saying. I think Stuart was talking about kind of how he noticed how systemically and holistically the developers thought kind of within their projects in terms of the supply chain and all that. I noticed that same type of thinking with Ujima and also with West Powelton with regard to the other participants, what I'll say, in the community. So there was always a consideration of how existing residents would be impacted, both from a livability standpoint and also from a value standpoint to the extent they're homeowners. And then there's also a discussion around tenancy, taking ownership, thinking of it in the sense of leadership, responsibility for what tenants will participate in some of these projects, and thinking about the impact that has on other residents. So I was impressed. It's not all the time you speak to developers who have the systemic thinking that spans outside of their project. So that was great.
Yeah, and I think to that point, just developers who see the value in that community input or feedback, or whatever you want to consider that, even with Raheem and Kyle, knocking on doors and actually talking to people in the community, and getting their feedback and input, and just even absorbing their reaction, whether good or bad, indifferent. Having developers who are getting that, it's great.
Yeah, and I, this shows definitely one of our strengths. Also, I think a big advantage, that we'll have is it's seldom that investors get a chance to get this close to the actual opportunity, and have the amount of time that we have to spend with those opportunities, so we get to know them really, really well. And at the same time, we're still able to be objective, but knowing those developers and those projects well, I think is going to serve us in ways that we can't even see, right now. So it was just great to see that sort of interaction. So let's talk about some of the TCIGs, the collective investment groups, short-term and long-term goals. How are you guys chopping that up, and what do you see going forward? Investors want to know what's happening here now.
Sorry, I might be giving everybody a bit of feedback, but just tell me to go on mute if I am.
Okay.
I think our bottom line at the outset is that we really want to be facilitating the effective and impactful deployment of capital in the city of Philadelphia. As it relates to our pipeline that we have in place now, we want to be sure that we're maximizing access to capital for those deals. We want to be providing access to capital in support of equitable development projects. Want to be advancing equitable development in the city of Philadelphia, and then acknowledging our role as an intermediary between investors and developers as an investment management firm. We want to be sure that we're facilitating the achievement of investment goals for our clients, and getting back to the tandem role that impact and financial strength have in the U.S., but especially in Philadelphia. I think that's that highlights our priorities.
And I think, just to touch on kind of the long-term vision, I think it's really having, Steve uses this word all the time, friendly capital. I love it. The phrase sounds so friendly, but, we really want this to be a long-term form of friendly capital to the investors. The developers in the collective, and that's a two-part, response, because we want to scale the existing developers and create a situation where they're able to scale their developments more and take on even larger developments. But at the same time, we also want to help, maybe some of the budding developers or developers who have the experience but maybe don't have the equity to get started in some larger projects, and we want that to be a long-term thing. And I think it's also, we have to talk to repeatability, in that this is going to be a proven process, and at the end of the day, we want to be able to say, like, this works, this really works. We took an idea and we created a proven process, and we could do it again and again and again and again.
And as we continue to do it over and over, we do it better and better and better each time. And that's one of the things that I like about where we are at this point, is as much as we're moving expeditiously, we're also being very methodical about the development of the process. And it's good to see the team come together and gel and view it that way too. If folks could see the investment management team meetings, you've got strong opinions from everyone here, and that's what we wanted in a team, so that we could have a process that is robust and, yes, repeatable, and at the same time fair. It's getting that balance right is absolutely critical. I'm a big believer in organizational dynamics when it comes to all of this, so everybody has a voice here. And I think for all of you that are watching, you can see there's not anyone here that's shy about voicing their opinion of what they think, how they think something should be done. And when you can get to that point, particularly with an investment team, you can really have some sparks flying and some magic. So this is great. We're glad to give everybody a view of that. Randall, did you want to add anything to that in terms of the goals, the short and long term?
No, I think we hit it. The repeatability is important. I think, to sum it up, it's we want to do deals and do the right deals, do good deals. And I think the flow of capital to these projects, which are viable and at various stages of readiness, it's kind of like success then begets success for the developers, and we want to be conduit to that.
Great. Well, let's talk a little bit more about impact. What is impact to TCIG? And there are lots of definitions out there, for impact. And I know we're developing our own set of measurement. But let's tell people where we are right now in terms of impact and how we are defining it. Whoever wants to go first.
Yeah, to jump in. I think we've been circling around it and interweaving it so far in the conversation, which is, I think reflective of the type of model that we're trying to build here. as you mentioned, Steve, there are many ways to measure, and our colleagues at 17 are influenced by the UN Sustainable Development Goals. I know in the investment management world, ESG is a critical concept. I think in real estate, it's very important as we're considering impact to be keeping context in mind. As the developers that we spoke to today didn't necessarily brand their work as impact oriented. They just described their initiatives as the right thing to do. And I think as we get more, everyone's becoming better acquainted with history and cultural context of Philadelphia. It's important to acknowledge what communities' wants and needs are. So in the same way that Kensington might not be the right place for a LIHTC deal, and South Philly may not be the best place for solar, there are other neighborhoods such as Sharswood and Lower North Philadelphia where shopping centers are needed, and places in Strawberry Mansion, for example, where affordability preservation is critical. So as we're talking about impact and how are we measuring it, I think what's obviously important to our developers and to the folks that we've been working with so far is the concept of inclusion. So how are we working with groups that are historically overlooked and have been excluded from investment opportunities, participation in real estate investment, and the construction cycle? How are we recycling dollars to support equitable development in the city? How far does a dollar spent in the neighborhood go? And then what are, if you look at one of Mosaic's projects in the Navy Yard, what's the multiplier effect of their investment in inclusion and cultural competence? So, there are a number of categories that we can get into, specific measurables. And I think that we're open to looking at a lot of things, but it's a big space, and definitely want to kick it to one of my other colleagues, as I know we've had a lot of really nuanced and refined discussions about this topic in particular.
Yeah, and I think, in measuring impact, again, what I believe, and I think we would all agree, is just, we don't want to be investors who are just trying to check off a box, in terms of impact. We want this to be a real major component of what we're doing here. And there's as Stuart's talking about the multiplier effect, there are traditional ways of measuring impact, whether it's, affordable housing, jobs created, these bottom line numbers. But when you're talking about the multiplier effect, what's the multiplier effect of, a Black developer hiring a Black attorney, and then hiring a Black architect, and then hiring a Black carpenter, or whatever the case is. That's the kind of impact that is not traditionally captured, but that has a huge multiplier effect.
Right.
When you're talking about a city like Philadelphia, that impact is huge, and that's the kind of impact we really want to bring alive in what we're doing.
Yeah, recirculation of a dollar more than once or twice in the community, going through 6, 7, 8, 9, 10 times.
Right.
Yeah.
Yes.
Good.
The last thing I'll add to that, because I think those are two great answers, is that, look, I think impact, as soon as you put a metric on the board, it can be adjusted and changed and avoided or exaggerated. So, I think impact, one important component is the who and representation. And it really comes down to sometimes what's an uncomfortable word, but power, in the sense of, who gets to make decisions, because decisions, reflect judgment. And I think judgment's on a case by case basis. And so I think the way, not only for developers to approach their project holistically, but for us as an investment group to approach, the capital holistically, and to be in sync and coordinated. I think that's all very important in terms of, the cast matters in terms of what
Mm.
the outcomes is going to be. And so I think we're well suited to make that.
Well, I agree. We can end on that point. It's I, what we wanted to accomplish with this session was to make sure that those who are interested have a much better understanding of how we're going to serve as stewards of the capital that will be entrusted with us at the Collective Investment Group. And I think everyone can see just through this brief discussion that we're well able and capable to do so. So we're really looking forward to working with the capital sources that are out there. We're looking forward to working with everyone that has something to do with this initiative, because it really is a wonderful opportunity and journey. So to the investment team of the Collective Investment Group, Karine, Stuart, and Randall, I just want to thank you again so much for your time, your input, and all of your hard work. Thank you for agreeing to be a part of this journey with us. Again, we're very, very excited to have you on board. And then to everyone else, this again is the closing session. So I just want to wrap up with a few closing points. Number one, we want to thank you for spending the time, investing time and energy with us today. We really, really do appreciate your presence and being with us, and all the people that you told about the event as well. And keep telling them. We're going to tell you more on how to do that. I want to say congratulations to all of you who attended. You are now part of the Collective Village, and we welcome you, and we look forward to getting feedback from you also. We want to thank all of our sponsors and partners, so that's 17 Asset Management and SOCAP. We want to thank Thomas Jefferson University, and Thomas Jefferson has done something really unique. They have a master's in real estate development that one can obtain, and I think this summer they've got a virtual course that is free. So make sure you go to their spot in the networking space and click on and check out that information. It's going to really be worthwhile. We want to thank Reed Smith, the Reinvestment Fund, Impact PHL, PIDC, Forbes, The Culture, Mission Investors Exchange as well. Thank you so much for helping us bring this together and pull it off. Your sponsorship and partnership means a great deal to us, and we couldn't do this without you. The event doors will remain open until 6:30, so that gives you at least another hour and 15 minutes. So we invite you to visit the networking booths and the sponsors booths. Check out what they have that's available. We'll make sure you spend some time meeting each other. Make a new friend. If you make one new friend out of this event or one new contact, that would be very, very great. To do. It'll pay dividends for you. Also, stay tuned. We will send a recording of this event, the entire event, to everyone that registered for the event. We're going to get that out to you shortly. Also, the Collective has launched its new website today. So you can, and we're going to put that in the chat so you can find it. It's a beautiful website. It will give you even more insight on who we are and what we are seeking to accomplish. And it's a great follow-up to what you saw today. Make sure you download the research paper that 17 Asset Management released today as well. It's a great piece. It features the Collective. It's cutting edge. It's the kind of research that I think you will find easy to read and to digest. I think you will enjoy it. And that's whether you're a developer or whether you're an investor or if you're interested in the space. It's a great place to start. So again, congratulations to everyone in the Collective. Really want to tip our hat to 17 Asset Management and the team there. They've just done a phenomenal job making sure that this goes off very, very smoothly. These events are not easy to do in person. They're even just as much, if not more challenging, virtually. So despite me repeating myself earlier in this session, everything else went off, without a hitch for the most part. So thank you very, very much. We are on our way to our first $100 million with an emphasis and a focus on using real estate as a portal for change. Everyone gets to benefit as a result of this. Every dollar that comes in, it does have a multiplier effect, as you had said, Karine, and there's so many people that will benefit from what's being done here. So congratulations to you all, and we'll see you at our next event. Stay tuned.